this video, I want to focus on some of the things I think property investors do really well and what share market and ETF investors can learn from them. And there's three that I think property investors do really well. The first one is that they don't go and check prices every day. And so most people investing in Australia, whether it's in an investment property or their primary residence, aren't going to the real estate or domain websites every day to check, any houses for sale in the area, what are they selling for, what's my house worth. And because of this, it means people are quite long-term focused around their property, and they aren't really caring about the ups and downs of the latest sale in their area or what's going on day to day. This is actually a really positive thing because it keeps you out of the noise of day to day and keeps you focused on the long-term compound growth of the asset class, which is something I think every investor should be focused on. So if share market investors and ETF investors can learn one thing from that, it's to try to avoid the temptation to check the prices every day, because it often leads to bad decisions, the temptation to buy and sell, to try and time the market, and usually that decision isn't going to help you in the long run. The second one is that property investors, unfortunately and fortunately, have high transaction costs when they're buying and selling. And so when you buy or sell a property, here in New South Wales, but even in other states in Australia, it might cost 3.5% to 4% just to buy that property. And that means that it's not a very clever decision to then go off and try and sell it a week later, or you're going to have to pay a lot of fees and you're not going to recover them in the price appreciation of that time. It leads to a lot less turnover and people just buying and holding. The share market is really the opposite of this these days. There are so many brokers now that have set up that allow costless trading or trading just for a couple of dollars. And I think this leads a lot of people to think that they should be buying and selling every day just because they can. And this is absolutely the wrong thing to do for a long-term investor. It leads to crossing spreads, transaction costs, tax, but more than anything, it leads to you probably buying and selling at the wrong times and actually giving up the opportunity to earn better long-term returns. So if you, as an investor in the share market, can try and create some friction yourself and some ways to stop you from buying and selling, I think that's only a good thing, whether it's just not logging in often or, having someone there to guide you and stop you from selling when you think you're gonna be jumping in to sell. And that really brings me to my third point, which is getting professional guidance. So when it comes to property in Australia, I found out recently, and I thought it was quite interesting, that about 80% of people who have an investment property employ a property manager to manage that on their behalf. Manage finding a tenant, manage the administration, managing all of the day-to-day work around that asset. Yet when it comes to share market investing and investing in a portfolio, that percentage is a lot smaller. It's about a quarter of people in Australia. Now, I think, and having run StockSpot for many years, people that could benefit from this because it reduces the time and effort they need to go and select their investments. They have to spend less time rebalancing them, managing the risk, and really behaviorally there's a lot of benefits of having someone there to help guide you and prevent you from jumping at shadows at the wrong time and selling your portfolio when markets might be a little bit volatile, when you actually should be considering buying more or at least staying invested. And so that's the third area I think property investors do well, which is outsourcing to a professional to help them and to actually remove the administrative and time burden, and an area that I think more investors in markets could benefit from, particularly with the advent of a lot of online and digital investment services that make it quite affordable and reduce the barrier of entry. For instance, at StockSpot, we manage portfolios for people who have as little as $2,000 to get started. So there's really a lot more appetite for even investors getting started to get professional help. And so there'd be my 3 tips of what share market and ETF investors can learn from property investors.